Everybody, good morning. So we got channel members Rob, Goose, Lieutenant Colonel, good to see you. Got Don, Hugh, Aki, Logan. We got Captain Sledge. We got Ivan. We got Will, Jerry, Diane, Scott, Frank, Sergio, Pauline, David, Craig, General Rush. Good to see you, sir. General Demo. And all my other subscribers like Mark, David, Robert, Rosalind. Good to have everybody this morning. Rongamer and Andrew. So what are Japanese bonds? Bonds are like IOUs that governments, maybe companies issue to borrow money. Now, when you buy a bond, you're lending money. In return, you get paid interest over time. Now, Japanese government bonds are issued by Japan's government to fund things like infrastructure and social programs. And for decades, these bonds were seen as a super safe place to put money because Japan's economy was stable and the interest rates or the yields on these bonds were very low and sometimes negative. Now, what's really happening here with this implosion is recently Japan's bond market has been in trouble and people are calling it an implosion. Rates are getting a little crazy. This doesn't mean that bonds are literally just coming apart at the seams. It's a dramatic way to say the market is kind of crashing or becoming quite unstable. And we're seeing rising yields, we're seeing weak demand, and we're seeing a big debt problem where Japan's massive government debt is over 200% of its GDP right now. And the Bank of Japan's role in all this is that they've kept bond yields low by buying tons of bonds, and they own over 50% of their bonds. Now, the Bank of Japan is cutting back on these purchases and letting yields rise, which is kind of shaking the market up a little bit. Now, what does this matter for financial markets, and how might this leak out? Well, this implosion in Japan's bond market isn't just a Japan problem. It affects the whole world. Now, global bonds in, almost every country writes bonds. Now, Japan's bond market is the third largest in the world, and when yields go up, it can push borrowing costs up globally. We've talked about the Japan carry trade in the past. Other countries, it could spill over to other countries like the US too. This makes borrowing more expensive for governments, companies, and even people getting loans. Now, we saw that yen carry trade unwind a little bit last year, and this could cause markets to drop like the 6% S&P drop we saw in 2024 after a Bank of Japan rate hike that we saw. And those hikes make the yen stronger, which impacts global currency markets, and we've discussed that quite a bit in the past. Now, the impact on emerging markets like Asia or Latin America that rely on Japanese investment might see less money coming their way if Japanese investors bring their money back home, and it could lead to less liquidity, less cash flow in these markets, causing stock and bond prices to fall. Now, U.S. market risk, Japan is a huge buyer of U.S. treasuries. They own about $1.1 trillion out of the $36 trillion public debt that we have out there. And this might force the U.S. to raise interest rates themselves or print more money, which weakens the dollar and also causes inflation. Now, Bitcoin and alternate assets, we've seen that Japan carry trade, people take that money in the carry trade and pump it into high-yielding assets like Bitcoin and stuff. So we could see money flowing out of there, or possibly Bitcoin becomes like the stability. Like it's kind of 50-50 on what might happen here as far as when that comes to alternate investments. Now, why is it happening right now? It's because Japan's inflation is higher than it's been in decades. So the Bank of Japan just can't keep rates super low anymore. They need inflation to be in check because basically they bring in everything they use. Demographics, as far as Japan's population is aging, where they're not getting a lot of young people produced. That's Elon Musk has identified that as a big problem in the world, that we're just seeing less and less young people actually put into the world right now. And it's possible in another 20, 30 years, we could see some kind of population crisis. Now, the Bank of Japan's also moving away from ultra loose policy and tightening up, and it's causing market jitters. This is kind of like freezing up. And global trends, we're seeing other countries have higher rates. Like the United States has higher rates than we've had in a long, long time. And that's put pressure on Japan's bond market to keep up with this. Otherwise, money's not going to flow to Japan. So what could happen next is that Japan's bonds, well, if they keep rising, markets could stay kind of shaky with stock and bond prices swinging wildly. The Bank of Japan might step in to buy bonds again and calm things down, but this could weaken the yen and cause inflation and hurt its credibility. And this could have a global ripple effect with higher borrowing costs. Stronger yen could slow global economic growth, and we could see this put pressure on the M2 money supply globally, which has been a big kind of driver of higher asset prices. And when you think about you can think about Japan's bond market like a big stable savings account and then suddenly losing value due to this bond thing. Now, life insurance insurers in Japan have major exposure to this situation. And I'll pop up the chart, show it right here. They're sitting on large unrealized losses due to this sudden shift in bonds in Japan. This is life insurers in Japan here, sitting on like $25 billion of unrealized losses due to this sudden bond flip around, if you will. So this is it's an important little thing happening in the market here. And, it can reach out and get us all. So it's one of those unknown unknowns. Like, how is it going to, it's a known unknown, I guess. Like, how is it going to unfold? Not sure. But it can reach out and get us all. We saw that, carry trade unwind last year and shocked the U.S. markets. We've got the Japan 30-year and 40-year yields spiking. What do I mean? Like, we suddenly took a very steep increase right here in the last couple of weeks in 2025. So be careful out there. This is one of those monsters in the shadows that can reach out and shock global economies or global markets, really. It'll affect the markets much more quickly than it will the actual economies, because traders are going to if a life insurance company in Japan blows out, that's going to have ripple effects all over the places. They have to unwind billions and billion dollars of investments. What happened? That's kind of what happened with like Enron in the Great Financial Crisis. All of a sudden it was illiquid and we had to unwind tons of stuff, and that, the mortgage-backed securities and all those sort of things got unwound. China owns the largest portion of U.S. mortgage-backed securities right now. So everybody thinks they own our public debt. They actually own our private debt with mortgage-backed securities. So this is one of those crazy things that's sitting there in the shadows that could reach out and get us. So just wanted to go through all that. Hopefully that helped a little bit. You can let me know in the chat if that was helpful, beneficial. But that I spent a little time putting that together this morning. So as far as the S&P goes, I was talking about how yesterday we kind of thought this might be topping out, but this is starting to look like a 5 up right now. So probably not a 4. It's probably looking more like this might be an A wave. So right now this may be an A down, and this could be an A up. We may see a B down, and we may see a C up into a little higher levels here. We'll have to see right now. What happens next on the next correction? That's a big question mark right now. This move right here is looking more played out. Like, unfortunately, I don't think we're going to see continuation higher today. This move right here probably going to experience at least a move back down, back around here. Could happen today, could happen tomorrow. That's what the chart is telling me with the overnight action. This big, this is where we were on the reopen right here, right there. So we're just talking about taking all that price action back. Traders be like, oh, the market had to take it right back to where we were on Friday's close. Funny enough, that just happens to be the 618 retrace. That could be an A wave up, a B wave down, and a potential C wave before we take the next leg lower. I still think we're not done on the downside. One little rip like this probably didn't finish that up. Now, it's always possible that it did and we're going higher, but the most likely pattern is for a move back down today. And if it takes shape as 3 waves, that would be the B wave probably. If this takes shape as a 5 wave, this, even though it looks kind of 5 wave-ish, might be the B wave. This could be the A wave, this could be the B wave, and we could see this accelerate further down for the C wave, and this wrap up more quickly, right there. I was suggesting last week that we may see this continue into June before we get down to those ideal levels on the downside. So be careful right there. All right. Yeah, basically the M2 could contract if the bond market explodes, Dave, Skaggs. Like that could be a possible outcome. I'm not saying it would. It's just like it could suck down. So I was just talking to Lieutenant Colonel Goose. I've speculated that it was the U.S. markets that had the problem. But I've also talked about how one of the other fiat currencies could fail, right? I've speculated how it might be China. Maybe it's Japan. Maybe it's the yen that fails and causes global market devastation, financial market devastation. So that's one of those things that it's developing and it could cause bigger problems. It really could. So you have to excuse me today. I don't feel the most awesome, but that reminds me, I have 30 minutes of awesome coming up at 5 p.m. Eastern today. That's 5 p.m. It's the only time of the week when I do a request show. So if you want me to check out your chart, come visit me, 5 p.m. Eastern. Channel members, of course, get priority in that. So if you're a channel member, make sure you come. Make sure you get your requests in. I'll check out all the charts. We'll do it for at least 30 minutes or until I feel absolutely horrible and need to go home and sleep. So there we go. NASDAQ coming back up pretty strongly too. If the chart's going to load. Now we have that high we put right up here. Just a few days back. We've got this big retrace cooking nicely. We're right in the zone where we can reverse and go lower. Like I was talking about on S&P. Not necessarily done correcting back up, but it could be. I'm kind of 50-50 on this pattern right here. Could result in a deeper move, could result in a push higher. Not sure. Not sure on NASDAQ right there. This didn't correct low enough, but that doesn't negate possibly needing one more little blip right up here before we start the bigger down. So a little bit 50-50 on this. Russell coming back up nicely, but that one, whole different pattern, right? This wasn't very quick on the downside. If we look at the high from back here to the low right there on Friday, we are sitting right smack dab on that 618 line as we come up into the open. Very easily push that down to a lower low. Be careful right there. Chasing Russell, IWM. I still have that short on that I talked about, and I'm looking for this to take another leg down, potentially in a bigger way. So we're just one little blip down right there. We did reject off of that daily roadmap line. Bigger, deeper retrace somewhere down in here is what I expect. And then we'll see, like, that could come back up and then result in a bigger down. Not sure. I'll probably take profit here and then reload, here or up here, depending on where we get to on IWM. All right. Market's moving quite a bit. Now, Trump announcing that he's going to punt those tariffs out to July for Europe. It's all a negotiation tactic. Trump did this the first time he was in office. He says a bunch of stuff, everybody freaks out, but it's a negotiation tactic. Like, we're used to people being absolute idiots when they negotiate and just telling everybody, like, hey, how do you get what you want? You convince the other side that you're serious about some crazy policy. Like Trump says, hey, we're going to put these large tariffs on everybody. Actually does it. And then everybody's like, oh, sugar, honey, iced tea. We got to come negotiate for better deals. And he actually got many countries around the world to come hat in hand and try to work out a better deal. That's how you negotiate. All right. That, you can't, as I say, you can't make a cake without breaking a few eggs, but it's like, or making an omelet, whatever it is. But it's that freaked out the financial markets because we're not used to that. Like, we were used to a president that that told us that hey, we're gonna do this, that, and the other, and then that's exactly what happened, and there was no surprises. But at the same time, you don't get the best deal when you're trying to negotiate something. When you tell everybody what you're gonna do, and that's what you do, and then it's like, if you tell everybody you want to negotiate for a lower rate and they're like, whatever, we have all the cards, and then you don't get your negotiation. So it's just a whole different thought process on how to negotiate deals. We're just, as the American people, we're not used to somebody saying, hey, it's going to be crazy, and then it is crazy, and just got to get used to it. So Bitcoin still hanging out right here at the top. This is the futures. Bitcoin on the on the spot market, smaller spot market. We did a 618 retrace. Now on the smaller time frame, pull that over to the actual bottom. So we're doing this retrace here. We've got the high, we've got that retrace, we've got this. This is 3-wave. This is danger. That's what I was talking about on the S&P shaping up right there. This looks like we're running ahead of schedule. Look at that. Look at this move right here. Look. This move right here looks just like what the ES did from that reopen up through right now. 3-wave retrace. Move higher. That's an ABC. Bitcoin's probably going to push a little lower, at least to a lower low than we made right back here in the short term. If this plays out, that's what that looks like right there. It looks like the A wave down. This looks like the B wave. And this looks like the C wave potential. And this looks like we're front running the rest of the US market. It's kind of fascinating right there. We may, like, this move right here may be what the US market does today. And we do this later in the week, maybe tomorrow, maybe Thursday, I don't know. And then we potentially see the bigger down. Kind of interesting right there. Is it foretelling what's about to happen in the US market? Or is it just coincidence that they look the freaking exact same? Ethereum not really doing anything. Just kind of sitting here consolidating right on top of the roadmap line. If you're wondering, like, what the devil is this orange line? How is this roadmap line relevant? Click the button underneath me, my channel logo, go to the homepage of the channel, watch that video. It tells you all about the roadmap line, gives you the code. If you're like, hey, code, I'm not a DIYer. I don't want to do that myself. I'd rather just push an easy button. Links in the description, $5. I give you the easy button to put it on your chart right there. I have it available for other platforms if you come join me in Discord. NKD, popping back up a little bit. Despite all that Japanese bond fear stuff, we're retesting. Now, this is a cautionary pattern right here. We broke down. This is retesting that uptrend of lows. We broke back below it, and we're retesting it one more time. This might lead, this very well, instead of just coming down here, this could be a setup pattern to do that. This is the Japanese stock market futures. I use this as kind of like my indicator of global liquidity. This is a scary pattern. Why? The most clear one I have recently is this one. Look at this. Broke down, popped back up, came back down, popped back up, and did that. That's exactly the same pattern that the Nike's doing. They're never exactly the same, but that's the same freaking pattern. That can go much deeper on the downside. This should be a caution light, caution. If we can resolve this, break higher than here, it's all good. If we break back below this low, this is the next level support. And if we break below that, likely we're going much, much lower. And there's no way that the US market does not pull back with this. I would love to see this hold if we go down, because if we do this, it's going to be some economic devastation. I got caught when we did this big move back here. It's when the carry trade blew out back in July, August. I got caught in a margin call that was pretty nasty. Booked me out like nice fat 5-figure loss in my account. Took me the rest of the year to make it back. And I don't really want to see that again, honestly. And what was crazy is if the broker hadn't force closed me, by the end of the day, I wouldn't have even been in a loss. But they booked me out in the pre-market. I digress. People are like, oh, why don't you fight the broker? And the clause says they can, their risk department can close whatever they want to in my account. It wasn't really a risk. It was a risk if the market kept plummeting, but it never got actually in danger. That just really frustrated me. If you can't tell, I'm still a little upset about it. Anyway, the dollar has retraced off of that pop. So we're not staying in that little wedge. Let's take it off the chart. Take this stuff off the chart. Let's see if we can save it and not have to redraw it again and again and again. So we've retraced. We've gotten back down to a 786. This is kind of like the line in the sand. We saw this on several things. This one right here went down for that big 786 retrace. If we step across, we're probably coming on down here. Should be right in line with that target that I've had hanging out here for a couple of years. And that just pushes it a little bit lower than that move right there. That's okay. Still could be bottoming in this vicinity. Now, if this develops a little further down, the rest of the world wants and needs a cheaper dollar, right? That allows other people trading with us in petrodollar terms or whatever you might want to say. That allows their US dollars to buy more goods, right? Stuff's cheaper. Like their currency buys more stuff in US dollars when the dollar is cheaper. So global trade wise, that's kind of what we need. Now, I'm not sure this is going down there necessarily. This move could be done and we could actually bounce from here and go up higher. This creates all sorts of worldwide market problems if we go shooting back up here. So this is one I'm keeping an eye on here. Not necessarily for trading, but for... this could cause global problems. So, Mag 7 stuff, Apple... still not being very strong here. As they say, so goes Apple, so goes the market. We're kind of sitting here at like potential triple bottom, potential triple top. That's kind of weird price action right there, right? That might be indicative of going on down right there. Speaking of indicative, All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results, and this presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any instrument out there, including stocks, options, bonds, forex, futures, cryptos, treasuries, bonds. If you desire personal financial advice, hire and consult a financial advisor, which is not me. I'm not playing one on YouTube. Just a guy pointing out some patterns and talking about some stuff. So watch out for that right there. First move down, A wave, 3-wave retrace at the 618, B wave, measured bounce can take us down to these kind of numbers. 130 to 140, possible. Lower low completes the pattern. That's just down below about 160. So be careful. Amazon has that pattern set up right now. Be careful, please. No, it's not a guarantee. It's measured bounces. They don't always work out. They're like 50-50. They're not reliable. That's why I don't have like a service. Everybody's like, JT, you should make a service that trades these measured bounces. But they're not reliable. They're kind of 50-50. When they play out, they pay out good. When they don't play out, they suck. So be careful here. It has the potential to do it, but it's not a guarantee at all. Google, I think I'm off of this one for a little bit. That spike right there was close enough. It's like close only counts in horseshoes, hand grenades, and atomic bombs, but that right there was close enough for me, hitting that 618 at 180 level. There's potential that this retraces more deeply, comes back to that 618. I don't want to get caught owning shares up here at 170 when we come down to 150. I would rather sell my puts down here. I've been put selling on this pretty aggressively, and right now this is potentially done on the upside for me for the time being. Meta, this tipped its hand. It wants to go higher, but that chart looks a lot like the Amazon chart. Could be an A wave down, a B wave retrace, and very easily this could accelerate to the downside. Downside support somewhere down here in this 400 area. If we push that down lower, long term, I still believe in the upside here. It does have the potential. I mean, it did set up the trigger for that, but this took way too long to correct and come back up. So my algorithm is not going to identify this as a potential trade for that 793 right there. You can see it. There's no flag for an entry, so be careful chasing that one right there. Microsoft, yeah, we're gunning for the highs. This is probably it's just a matter of time here. Does it correct back to the roadmap line and then shoot up, or do we just consolidate right here at that top of that resistance and then shoot up to 49, possibly 500? This is the most bullish setup out of the Mag 7 stuff. That's Magnificent 7. That's the 7 biggest companies. Right there they are. NVIDIA, well, very similar. Just this big move down right here took a lot longer, but it looks very similar to this one and this one. A little bit higher on this move up. Very easily, this could take us right down in here. Possibly even as low as the 50s, 40s. I mean, I've talked about all sorts of things. Now, technically, it does have the close above the 618. And we could see it extend on up, possibly to that 165 area. New all-time highs. But, like I said, it's got that 50-50 chance that we could see a big flush. Tesla kind of has that same pattern too. At potentially an A, this potentially a B, and we've been holding right here very tightly. If we retraced, this would be kind of my hopeful hold, but it could go on down to something more sinister. Now, we do have a large paradigm shift in the company coming up, potentially starting in June. Is that bullish? Is it bearish? I don't know. We've seen this add crazy amounts crazy amounts. Like when the market was absolutely bearish on Tesla, we've seen this thing do moves like that. When the market was super bearish on Tesla, we've seen it do crazy moves like that. Could this be another time where market's kind of bearish on Tesla? It's been rallying pretty strong, and we could pop it on up in here, or could we come on down here? Hard to say for certain. It's got that 50-50 kind of pattern going here. Could break out, could break down. I would want to see a minimum retrace back down to this roadmap line. Hold to support higher. Possibly is down as low as here. Support higher. If we just keep ripping, odds are we're going to see a bigger, deeper retrace before we can actually break out higher. And if we break down below, that's where we get trouble. Could see much lower prices. That's kind of the Mag 7 stuff for now, for today. That's my update. Now, I go pull all the gainers in the pre-market. This thing's moving $2 more up, put them on the gainers list. I mean, I pull everything moving $2 more down, put it on the decliners list. There were like 120 something gainers today. Pretty crazy. There's like a few dozen, or maybe a dozen decliners today. Decliners is usually where we find the best stuff, but this looks like it's all gold. Gold and leverage gold. Shiny, GDXU, ugly, gold, GLD. Sky is not gold. Let's check that one out. That's a 5 down. Probably going to go in a bigger retrace here. That 5 down does overlap, so potentially that's an A wave correction off of that high. Might expect some sort of retrace back up into that consolidation zone right there. PDD. Well, that doesn't look good. Lower highs all the way across. This might break the pattern. It did set up a measured bounce back here, or I mean a roadmap bounce. I've been expecting kind of a 180 bounce target, but then it did this deep correction. It doesn't negate going up here, but then we made this lower high, and now we're sitting here. So we're either winding up the spring for a big pop, or this thing's going to push down through the lows and get the next extension lower. Yeah, they do fail 25% of the time, so be careful out there. Wow. So there's a leverage on PDD right there. 2x leverage long, and this is getting whacked right there. Whew. That one getting slammed. JT, why don't you trade pharmaceuticals? Because sometimes they get wrecked. All right. Volatility, gold miner. I do expect this to come back down right there. I don't think I mentioned gold or oil. Circle back around. Gold potentially topped out on Friday. It was a Hail Mary for the gold rush trade right there. Potentially that was the top. This is the next move we expect. GLL, you want to trade to the downside. This thing be popping while gold is dropping. Ultra short on gold. Do still expect this to come on up to this 14 area potentially. And oil just keeps winding it up here. This right here, as long as we hold this area, has potential to pop it back up to this 67, 68 area right there. Thought that was going to be our tell, but nope. We took that right back down. So now we have a 3-wave down, holding pretty well. Love to see this pop. We do have support on down here to the 59 area. If we were to erode this a little further, could see that dip into here. Still sets up the potential bounce to that area right there. All right, things moving up. ASML. Yeah, we got to build some chip fabs here in the United States, right? So we're not beholden to China and Taiwan. We need some chip fabs. This is the biggest producer of chip fabs. Upside right now, somewhat limited to 780 to 790 area. Right there. Service now. Potentially set up for a breakout to 1300. Best bets. Whew. That's a crazy pop. That's an absolute dumpster fire chart right there. Reverse split, reverse split, reverse split. Holy bananas. This thing is highly likely to go right back down here. All this was with the reverse split that we recently did, this created supply and demand shortage of shares, which allows it to do crazy things like that. But very typically, these dumpster fire charts that do nothing but this will get these little pops and then go right back down to being trash. Be careful. G. Veridova, talked about that on Friday. Potential upside. Appleoven sitting at that resistance. That could be an A wave, B wave, C, or do we break out and go higher? Big question mark for me. Goldman Sachs popping a little bit. I do expect this to get the continuation down, just like XLF. Do expect that to come on down. JP Morgan. Do expect that to come on down. So we'll see if that actually plays on out. DPST, regional banks. Not sure here. That didn't touch the roadmap line. Move down. If we can hold here, we may push into that. But this also could turn down and go deeper. PLTR. Still has that upside target, 137. AMD. Can we push through the roadmap line? That's only 3 up so far. The levels that we hit on this was a measured bounce right here. Did the 618 retrace, then shot up here right to the primary target. If we can get up to the extension target, this turns it more bullish. It's not a guarantee, but it does turn it more bullish if we can extend right up there. If we turn down here and just come on down, that's pretty much the end of this measured bounce right there. So I did not play it. I wasn't feeling super confident on this. I would expect a bigger, like if we're going to turn this bullish, that would complete a 1, 2, 3, 4, 5 potential here. Do a 1, 2, 3 back down in this area. That would potentially be a setup for and possibly retest this downtrend that we've had in here for a long time on AMD. If we did bring that support right around 100 after making this higher high, big potential setup for going higher. How big? We could be talking about levels up here. 400 to 600. That'd be a pretty nice one. You know, buying in at 100, booking out 400 to 600. That's a 4 to 6x just on shares. It's a nice upside potential. AMAT, not showing the most bullish breakthrough of the roadmap line here. Still got some work to do to get higher. Let's see, Reddit. Still expect that to come back up to the roadmap line again. That is a measured bounce right there. Potential setup. 50-50. We did see a large order come through on my dark pool scanner. RDTL could be a way to play that, as I talked about last week. We're seeing a little bit of softness here, but that upside potential just back to the roadmap line could look something like that right there. XLY. Nothing clear. Oracle. Nothing clear. That could be an A wave, a B wave. Not sure. Not sure. Let's see. Anything else interesting I skipped over up here? Coinbase winding up for a potential pop to 396. Let's see. MSTR. That sure does look like it's going to come back to the roadmap line. Be careful right there. That can be a bullish setup to go higher, But that weakness right there sure does look like we're going to go retest that roadmap line. If you're long MSTR, be careful with your money right there. Let's see. What else might be interesting? CEG. Yeah, it's probably going to grind on up to 393. Carvana. Target at 321. C-Scaler. That might push on up to 279. Restoration Hardware. Ooh, I don't like that overlap. Sledge. Not fond of that, but it could be a 1-2, 1-2, and set up the bigger move. So just be cautious there, my man. Home Depot. Capital One. Did complete their purchase of Discover Card. All my emails for Discover Card now say Capital One. Blah, blah, blah. Do we retrace and hold and potentially go on up to 222? OKTA at the targets. Watch out for the retrace. Blackstone. Looks kind of bearish. May go revisit the low again. Turn down off of that roadmap line. So that's a roadmap line bounce. Break down below the 618. 786 is like the extra line in the sand for the downside. And we could see an extension lower. Yep. Watch out for that one. Let's see. Sizzle. Targets. Boom. Dang, that one. Crazy right there. Buy now, pay later. Rocking and rolling until it's not. UNH. Still hot in the bottom. Might go. I fully expect this to make one more dip right down in here. The question in my mind is, do we pop it up back up in here before we do that? Or do we just go rip the Band-Aid now? Which path? Not sure. That's it. Targets. Oracle. DKS. Still got some downside to go. This one has earnings. Oh, last week. That's weird. Somebody said earnings were coming up this week on something I was watching. Must have been mistaken. BRT. Chopping around. FSLR. That looks like a bearish turn down. Break back below the just 50%. Like that is still a measured bounce. This whole zone is the measured bounce zone. That can lead to a lower low. How much lower? Somewhere down in here. One, two, three, four, five. Actually, this looks more like potential fifth wave extension. Yeah, we might be hunting the bottom right in this vicinity right here. One more lower low right there. And then do a bigger retrace up to the 200 area. Once again. What else? What else? Shopify. I would love to see this retrace right here. I will buy a position if we can get this retrace and hold and turn back higher. We just go break it out now. There's your target, 141. BA. This needs a retrace. That's one swift move up off the lows with no sub moves, hardly whatsoever. That can be a bullish start, but we need a retrace. That's a potential new trend, pullback to get the continuation. A-Lab, resistance, no, look at her go. That was cool. Target right up here is semi-alert. Wow. Beautiful, beautiful move. Now there's potential this goes ripping right up here, but we could pull back before we pop.
Keep going, baby. Beautiful. DDLG, consolidating at the roadmap line. DJT. Interesting pattern here. I think this has a setup to potentially pop. We're holding that resistance really well, but this has a potential pop. Maybe even up to the target. And it also could go lower, so very cautious. You know, we can see this dip on down. Just technical. Don't care about who it is. Just the technical pattern here. If we can break it back above that right there, probably coming on up, maybe even up to here, 64. If we break that back down below the 76, going to extend this on down, probably around 14. ANET consolidating. STX pushing on up, baby. Wow. Upside target right up here. That was a big measured bounce. As I said earlier, they're not guaranteed to play out, but this one on the way. That's like the conservative target right around 180. Aggressive target 260 up here. And it'll probably do some sort of pullback. It probably won't just go straight up there. It'll probably do some sort of pullback before we get all the way up there. MU keeps consolidating. Love to see that break out and go. FTNT, yeah. Still consolidating. Upside target 119, possibly 124. And as a reminder, coming up this evening, 5 p.m. Eastern, 30 minutes of awesome. Come see me. Make sure you set a reminder in your calendar. I'm going to go make some adjustments on positions. I got put some stock over the weekend, so I've got some things I need to do. I'll post alerts for Discord for those of you in engineered income and greenlight income alerts bonus. Those things are things I need to pay some attention to. Otherwise, have a great day. Be safe out there. The account you save may be your own, and we'll see you at 5 p.m. Later.